Talk about the market, guys. Let's look at what's happening with the 2-10 spread. 56 basis points is what we're printing today, but it's been a slow grind lower throughout the entire year. Seema, what does that tell you? What are the consequences?
Look, I mean, I think maybe there's been a little bit too much fear about this flattening of the yield curve. I don't think, it's not inverting. I don't think we're looking at an imminent recession by any means. I think there's a lot of things which are feeding into that, and that is, these concerns about low inflation, justified, but, we have got a deflationary phase with globalization, technology, our star is lower. That's a reason. I don't think it's meant to be indicating that there is a forthcoming recession. Recession is going to come at some point, but I don't think it's going to come in the first half of 2018, and maybe towards the end of next year. That's when we can start getting worried. But for the time being, that flattening of the yield curve is to be expected at this stage.
And Morgan Stanley actually doesn't see that recession until 2020. So what's the play when it comes to sovereigns? I mean, today it's going to be sell the short, buy the long.
Yeah, I mean, I guess, look, my view is that rates are going up. So wherever you look, 10 years, 2 years, they're going to go slightly higher. But the true concern is about inflation. Now, my view is that I think inflation is going to start rising. I think there's already signs of that coming through. We've seen that from the data recently. And I guess it was slightly surprising that last week's minutes suggested that the Fed was still concerned and probably more cautious about inflation than the recent data has suggested. But I think that inflation is going to come through, and I think those rates are going to go higher as a result of it.